Good morning, gang. Good morning. Welcome back to this week's altcoin update. First and foremost, remember, nothing discussed today is financial advice. I'm not a financial advisor, and this is just for educational purposes only. And now that's out of the way. Today we're going to be taking a look at XRP, FETCH, and GMX. They're the ones that were requested this week. Obviously, if you guys want an altcoin covering next week, then either let us know down in the comments, or look out for our Monday tweet asking what altcoins you want covering for Tuesday's video. Okay? And all the links for that is down in the description. Before we get into these three coins, big shout out to today's video sponsor, which is GMX. Obviously, if you don't know who GMX are, they are a crypto exchange that not only allows for crypto trading, and that's spot and futures, but you can also trade FX, commodities, and stock indices, all using crypto as collateral. So obviously if you deposit USDT, then you can use that as collateral to trade forex pairs, for example, or the S&P or the Nasdaq. Okay, so big shout out to them. Obviously, if you guys do use the link down in the description, you will get up to a 5k deposit bonus, and you can also get up to a $100 free trade. Okay, so obviously if you do want to check them out, then links down in the description. And thanks once again to GMX. So now that's out of the way. XRP. There we go. So we covered this a few weeks ago after the big rise. Now the big rise was obviously on the back of the SEC law case, whatever it was, and everyone told you, all the influencers, crypto, Twitter, YouTubers, all told you that it was just going to go in a straight line up to new all-time highs, and that's it. You know, game on, bull market for XRP, yada yada yada. In the end, as we discussed at the time, we came into this trend line, took the liquidity above these highs here, and then we've retraced the entire move. Okay, so if you'd have followed along to influencers and then bought into the FOMO, then chances are you sat underwater now while you've been stopped out. Okay, and this is why you don't trade on the news. Don't trade on the news, because by the time the news is released and you see it, and chances are it's already pumping, by the time you've caught onto the news and you've seen it, you're about here, and then you market long into that, chasing this pump up, and then you just get destroyed because you didn't take profit, because you listened to everyone else that told you new all-time highs. Okay, so it's quite funny, all the influencers that were bragging about buying it down here, and then they were holding it, and now they're just sat back at their entry. It shows the difference between a trader and an influencer. You need to understand which is which. Okay, so now we've retraced the entire move. What's next? Okay, what's next? Well, I'm going to zoom out to the daily. Okay, I'm going to draw on a volume profile of this bottom range before the pump up, because this is what I'm interested in. And now let's have a look. Okay, so from here, where we are right now, am I interested in longs? No, not on a swing side, but maybe on an intraday potentially if there's a setup given, but you'd be longing into range high resistance. Okay, so it's not really smart trading, my ideas. Okay, probabilities are against you, but if it does break out of this range, okay, comes above these highs without a pullback, a deviation, and a swing failure pattern, okay, then we can look for higher prices. If we are looking for higher prices, quite simply, just looking at this now, without even throwing on a volume profile, we can see we've got a sticky area here, around 63 cents. And if it starts to get above that, then we've got this sticky zone to contend with. Okay, so you've got two key zones there. If we come up into this first one, start to break down, start to show some signs of weakness, then I'll be looking for shorts all day long. Okay, back down towards range highs. Okay, if it continues higher than this one, then, as I say, into this zone here. Now, this is a bit of a wider zone with a thin area attached to it. So this would be the first area of interest, which will be around 70 cents. If it gets higher than that, then we can look up towards these local range highs, roughly around 80 cents. Nice round numbers. Everyone likes round numbers. Okay, so that's if it goes up from here. Okay, and actually breaks outside of this range high. Okay, now the alternative is, and again, I'm not saying I'm shorting here because I'm not interested in shorting here. The only place I'd have been interested in shorting are these range highs. But if it does start to roll over, then I'll be looking to backfill this wick. Okay, and if it backfills this wick, then we can start looking back down towards the EQ and these lows. Okay, so if we start to come down here, we show a sign of strength at the EQ. Okay, we start to see some local market structure change, maybe on a lower term time frame, then yes, I'd be looking for longs. And if I'm looking for longs, then we can start looking up towards range highs. Okay, If you don't get a reaction down at this EQ, then let it roll over further. First and foremost, we're looking at the point of control. Could offer a bounce because it's now a naked point of control. So the first tap of it could offer a small bounce. If it does, great. Look for that strength. Take a long. If not, we let it roll over and we look for range lows again. Okay, we're just within this range. Okay, we've been trading this range since, what, back here, May last year. One big deviation and back to trading this range. Okay, so ignore the people that are telling you bull market is going straight up. Ignore the people that are telling you it's going straight down. Just trade the range and eventually one side will break. Okay, and if it breaks, then you've got to question yourself, is it just a deviation or is it a sustained break and it'll carry on? But once again, I've said on this channel so many times, thin inefficient move like this, if you start getting acceptance back into it, then chances are it's just going to roll over. Same with if you get a thin inefficient move down and it starts getting back up into it, chances are it's just going to blast straight back through it again. And it's just the old BART pattern, time and time again. Okay, or comes down, goes along, and then comes up. Okay, that's all it is. So that's XRP, fairly straightforward. We're just in a high time frame range. Okay, and it's a good range to trade. Fetch, FETCH.AI. Okay, so what can we see here? So first and foremost, the two ranges that I'm mainly interested in are this range here, and we've had this on last time, and currently, as it stands right now, this range here. I'm just going to drag that back a little bit so we can see that. So these are the ranges that I'd be interested in playing. Okay, so where we are right now, am I interested in taking a trade right here? No. Okay, what would make me interested is if we get another spike up, take out these highs, nice little swing failure pattern, then I'd be looking for shorts. And again, targeting back down the EQ, back down at the low. Okay, so T1, T2. Okay, that's what I'll be looking there. If you don't get the deviation and back under, and it just continues going up, then we can start to look into this consolidation here. And if we're going to look into this consolidation here, we can see we've got a sticky zone down here, which will be coming in roughly around 33, 34 cents. If it starts clearing above this, then we can start looking back up towards this point of control region, which is around 43, 44 cents. Okay, that's if it continues up. Okay, but bear in mind, we've got local resistance here. So that's for the upside. For the downside, obviously playing this range. If it does start to roll over from here, that's happy days. It's no problem for me. You know, if we don't get a chance to enter a position with a swing failure pattern above and it starts to roll over, no problem. Looking back down towards range lows. Do range lows hold? Yes or no? If yes, then you got your long trigger. If no, and it just starts to roll over, then we can start looking back down at the old range down here. Okay? Do we get a reaction on the old range high? Yes or no? Then you've potentially got a long trigger. If not, then we're just back to trading this range. Okay? And then that means this whole move up has just been completely retraced. Because we're in a crab market, we're in a sideways market. Everyone keeps saying that, you know, we're in a bull market, that's it, up only, yada, yada, yada. Until we start clearing all-time highs, we've still got a lot of resistance to contend with. Okay? And just like right now, we've got support. Okay? So we'll just trade the ranges until eventually the break. That's fetch. Okay. Finally, GMX. Never even looked at this one before, so this is new to us. Well, it looks like a great chart, doesn't it? Down, pump, fully retraced. Great chart. Okay, so what can we see with this? There's not much that we can go through with this. First and foremost, do we have a nice channel, I'm going to assume? Yes, we do. A nice reaction from this EQ of the channel, and we've started to come back and backfill that wick. Okay, these lows down here would be of keen interest. Okay, kind of bottom range. See top range, that'd be interesting. Okay, right, okay, so with this, and again, this chart looks terrible. Okay, so for me to get involved with this chart, what I need to see is this start to bottom out and then start to form a range. If it starts to form a range, then I'd be interested in getting involved. But personally, I wouldn't be actually interested in trading this range, trading this chart as it stands right now, because we're just coming down. Okay, and until we start to change some local market structure to the upside, I've no interest in longing this, and just likewise, I've no interest in shorting this because we're already very close to this. So this wick here that happened obviously when everything came down on the 17th of August, this is a good target for price to come down to. So effectively fully backfill this, and if it does, then there's a good chance that it comes back down to these kind of levels. Okay, if we do start to come back down to these levels, potentially take these lows out, get that local market structure changed, start to see that sign of strength, and potentially I'd be interested in longing it. Potentially. But once again, I'd want to see an established range down here before getting involved. But that would, I suppose, pique my interest down here. It's probably the best way to say it. Okay? Now, if it starts to rise from where we are right now, okay, and bear in mind we're looking on a daily chart here, so if it starts to rise here, then we've got this sticky zone to contend with, which caused the breakdown in the first place. Okay, so you've effectively got a small range within this. Okay, so if it comes back up here and you get another nice rejection, then you potentially got another short trade. Okay, and again, you'd be then looking at these lows, followed by these lows. Okay, if you start to see this sustain and break above these highs here, which is coming in at roughly, what's this? Let's just do it here. It's roughly around $39. Then you've got this thin move here to contend with up to the next sticky zone up here. Okay, you've got a nice daily level here, and that's coming around $47. Okay, start to clear that, then we can start to look at these local range highs, roughly around the $60 range. But again, charts like this, I'm just not interested in. Just being brutally honest, I'm not interested in. If it comes down lower, yes, I'm more interested. Okay, if it does start to pump from here, then fair enough. Starts to change some local structure, then I'll be looking for the opportunity to get back involved then to take it higher. But until then, it just looks like crap, let's be honest. Let's throw in a volume profile, let's just see where we're up to. Excuse me. You got the point of control roughly coming in around $41. Obviously, this sticky zone here is what we discussed, which is about 38. Okay, and then very little volume down here. So yeah, that's all I'll be looking at, quite simply. Right, and that is GMX. Obviously, if you guys want to understand how to trade like us, then first and foremost, come over to our website, SpitfireTraders.com. The link is down in the description. Okay, click on the Join Us tab and scroll down, and for $59.95 Great British Pounds or $75, you get access to over 30 modules, which ranges everything from beginners through to advanced trader. Is some of the examples. In fact, it's live action events. So you've got your introduction, you've got your absolute beginners, ranges, Fibonacci, volume, patterns, harmonics, order flow, how to read the order flow like we do. So that's including imbalance charts, CVD, delta, TPO, and then there's so much more stuff, Elliott, with theory, psychology, entering and managing trades. We just added another module to that last week, which included context, which is how to trade slow bleed days and volatile days. Okay, and then there's loads and loads more on here, and there's all the cheat sheets as well, which includes all our templates for the order flow software. So yeah, if you want to learn to trade like us, it'll cost you the grand old price of $59.95 Great British Pounds. Okay, right, that'll do. So obviously, if you guys want an altcoin covering next week, then let us know down in the comments. And if you missed that, then check out our tweet on Monday, which asks what altcoins you want covering as well, and go reply to that. Okay, and until next time, gang, as you were. Bye-bye.